Hello and welcome to another Forex trading tutorial on the Trading Systems channel here on YouTube. This one is compliments of Forex Examiner at www.forexexaminer.com, and today we're going to cover a simple 4-hour Forex trading system. This particular system is applicable to a number of different time frames besides 4-hour, but we're just going to show you it with reference to the 4-hour Forex market. Okay, what I've done is I've popped here into a simple charting package. This one in particular is by MetaTrader, and the chart you're looking at is a candlestick chart of the euro dollar US dollar in the 4-hour version. Okay, and what we're going to do here is we're going to scroll ahead and make some chart observations, and right away we come across something of interest here. What we see here is a space between this high and this low. That is called a gap. When if the current bar's low is greater than the previous bar's high, or the current bar's high is less than the previous bar's low, for instance, in a reverse sense, then that is a gap. And gap trading was based upon observation that quite frequently when gaps opened up, that the market traded in the direction to fill the gap. Okay? And the theory behind that is that there's a certain level of exhaustion that was happening, and that the market had basically shot up past a mark with such momentum that it created a gap, and that it was natural for to bring the market back to equilibrium for the gap to be filled. So let's just take that observation, and we can see in that case quite obviously that gap was filled. Let's go through and find another one. That wasn't really very much of a gap there, but it would have been filled in that instance nonetheless. Let's see if we can find ourselves a nice fun gap here. We'll keep moving along. Moving along. Maybe you're looking here and you're seeing some that I'm not seeing. You could actually consider that to be a gap, but it looks like more of a price anomaly than anything else. If it were a gap, amazingly enough, it would have been filled anyway. So we're moving along. Okay, here we are. Here is another gap. And what could be done in these instances is you could place a sell stop right below that low if you wanted to, and in order to take advantage of the fill of that particular gap. And as you can see thus far, in the limited amount of data that we've been scrolling through here, that each and every gap has been filled. See if we can find ourselves another nice big one here somewhere. There's a slight one there, and that slight one gets filled. You start looking at trades that have a high probability of recurrence, then in this particular case, and not in all markets, in the Forex market, you'll find this to be pretty reliable. You can see a gap there between this level here, that level there. Okay, let's see if we can find ourselves another one real quick. But I think you generally get the idea of of gap trading. And naturally there are words of caution with regards to risk control, because doesn't mean that just because there is a gap doesn't mean that the gap will be filled immediately. And if now here we go, here's another one. Here's a nice one here. So say we were selling at that particular level. Okay, so went down and it filled that gap, and we did okay there. Let's find ourselves another one. Now here we go. There we go. Now here is a gap here that is continuing in this direction. So now, interestingly enough, as you can see, is very statistically strong. That gap does get filled. But there is some, again, some move against you in this particular case. But as you can see, you wouldn't really have been in much danger, because if you're placing your sell stop below that low, you would have never gotten filled. Therefore, you would never been on this ride in the opposite direction. So no worries there, right? Okay, let's see. Let's find ourselves another gap. I think you're getting the feel for this. Here's another one. Okay. Some downside action there. And how you trade it, whether you trade it for a longer term move, or basically whether you just trade it to grab some quick pips as the gap gets filled, that's completely up to you. Simply make certain that your risk is commensurate with your reward, and that if you're risking big pips, then you are potentially making big pips too. There's some beautiful moves here. Don't want to get off topic, but as I scroll through here, just wonderful, wonderful. I remember so many of these trades. Okay, as we go back through, go back through, go back through. I'm not considering that to be a gap there. And lastly, what I'm going to do is I'm going to punch up the more recent types of information here. And this is what we want to look at here. Now you can see that is a huge gap. And yes, it can spell some big opportunity. So we could have sold at this particular low and we'd be short, but let's see how things would have turned out. You could see here would have rolled up, started filling the gap, but not quite. So if we have our profit target down here, we're not making money yet. Okay, so as you can see, this too was yet another gap that was filled. And here we have an additional opportunity. So we can always look and see how that pans out. But that is a gap fill trade on 4-hour charts. Thank you very much for taking the time to view another Forex Examiner tutorial. And feel free to visit Forex Examiner at any time at www.forexexaminer.com for more tutorials, charts, great instructions in general, information on risk control, and the things you really need to know to trade Forex effectively. Thanks again from Forex Examiner.